All right, welcome back. Today we have again with us Gareth Soloway, Chief Market Strategist of In the Money Stocks. Gareth, how you doing?
I'm doing really well, Greg, and it's always a pleasure to talk to you.
Yeah, it's a lot of fun, and I think a lot of people enjoy the conversation, and they get a lot out of it too. So yeah, man. So let's jump in. I know a lot's going on. What are you looking at lately in the markets, and as that relates to Bitcoin and crypto?
Yeah, so I mean, the markets are still kind of watching every headline coming out from Russia and Ukraine, right? Friday we saw that gap up initially, or I think it was Friday, and the markets had gapped up after supposedly Putin had said something positive about maybe negotiations. And then I think it was very interesting to see how the market, after just a little bit, I mean, very limited upside, it opened up and then right away started to sell as people said, listen, this guy isn't some guy that you can trust in what he says, and there's no troop movements to signal any pullback. They're still bombing, the crazy amounts there in Ukraine. So the market really sold very sharply, closed at the lows of the day, which is not unusual for a Friday when the markets are closed for 2 straight days. So people don't want to be buying into Friday when you have a war that could, God forbid, could escalate and draw in more countries or NATO. I mean, there's just so many risks right now that it makes it very tough to be someone who's just accumulating.
Yeah, investors love clarity, and
Yep.
it's the markets are very knee jerky to any kind of news, and that's more typical of a bear market behavior, reacting to any kind of news, because it's not just what's going on in Ukraine. It's any news that comes out. The markets are very knee jerky to it. You don't see that so much in the bull markets.
Yeah, you're right. In fact, I vividly remember how many, in the last prior to this year, 2022, but, going back to late 2020 and 2021, there would be news that would hit that you'd be like, that's not good news. And then the markets would sell for like an hour and then boom, off to the races they would go. And you're right, way different market environment. The psychology of the market is 100% different.
Yeah, and technically, it's only the Nasdaq that's in bear market territory,
Yeah.
where still correction territory for the S&P and the Dow.
Yeah, and I think it makes sense. Considering that if you look at the percentages, the Nasdaq was the one that had the biggest gains during COVID, especially. So it makes sense that one would be falling the hardest. There are stocks getting. I've been accumulating. Last week I really did take some initiative and start accumulating plays. Zoom. Some of these charts are just getting to the level. And listen, in bear markets, notoriously things go lower than you would think. But when you look at a chart like Zoom, and I'll throw it up here on for everyone to see, you're now getting to points where you can kind of make a case that it is at a valuation level. So for me, like, I love looking back on charts and seeing that price is trading into where it was at a prior point before all this publicity, right? So during COVID, Zoom became a household name, and you're now trading at levels that were prior. So here's your March, here's 2020, right? Right there. That's when COVID hit. And this is when it obviously took off. You're now trading back to levels where it wasn't a household name, yet it is still a household name. So, granted, could you overshoot this level? Yeah, of course. But ultimately, I think at these levels, it starts to make sense to nibble on some technical trading levels here on good quality names. I wouldn't go to kind of the small cap route where they still don't have the earnings behind it. But Zoom, I think, is trading around a 20, 22 PE, which again is not horrendous now. When it was at 100, that was ridiculous. But at 20 to 22, you can kind of make sense of that.
Yeah. It seems like the deleveraging has somewhat take place. Now we're in the repricing, back to normal PEs, given standard interest rate environment. What a lot of people are forgetting is that where we came from was a zero, negative risk or zero risk, interest rate environment, no downside really. And I saw your tweet, and, so I'd been watching it, and I, like you said, to your point, I don't want to go into the weekend sitting on anything, because you just don't know what's going to happen, over the weekend, and you can't unwind that position. So,
Right.
I'm going to wait till Monday and see how that one shakes out. Now, what about Amazon? What are your thoughts on Amazon with the stock split and all that?
Yeah. So, notoriously stock splits, right? I want everyone to really fully understand that nothing changes for the company, just the share price and then the amount of shares outstanding change. but it is a way to kind of artificially keep your price up. And it does give buyers of options. I mean, it makes options a little bit cheaper. So, you don't have to, you remember, you can't buy partial options. You can buy partial shares, but I don't believe you can buy partial options. So for a lot of investors that like to play options, they're just not able to play Amazon prior to the split. So I understand it getting a little bit of the upside. To me, I look at the chart and it still hasn't corrected enough to make me feel comfortable. You can see that you're now trading kind of in this range where if you connect these lows, you're just kind of dangling right around this breakdown point. And that's what you don't want to see. You don't want to see this really break lower. If it does break lower, I think you're probably headed down towards the 2000 level on the chart. But yeah, interesting news. I mean, we've seen Google announce it. Apple did one not too long ago. Obviously, Tesla was a big one. But remember, Tesla did it during a bull market. So it just got amazing price action. You're now in a different environment where I wouldn't expect the bullishness to last quite as long.
Yeah, there was a little pop on the news, but I think historically, when you look at stock splits, they don't necessarily exponentially increase price of the stock. It just makes them more accessible for people.
Yeah, and I think again, it's a lot of companies will use it to kind of generate that pop in the stock that they want to get. So I think there's the new CEO at Amazon. He probably wants to keep the stock somewhat up while he's trying to make new initiatives and do things like that. So a perfect example. And again, I understand it. Maybe Amazon is saying, hey, listen, could we get in the Dow Jones Industrial Average, right? I mean, Amazon is the biggest retailer in the US. So there's no way they would ever put Amazon in at $3,000 a share into the Dow, because it would literally dwarf every other company in the Dow, right? And that's what Apple did, right? Apple did the split and then they were able to get in. So maybe that's the angle here too, is maybe they're thinking, all right, well, we should be in the Dow, we should be in that index. And this is one way to kind of open the door, if you will.
Yeah, I think that's kind of the narrative out there, is that's going to be the next step. And then you're going to have a couple of companies. Really, I mean, right now, Apple's pretty much holding the Dow up. I think Apple has a very similar chart to Amazon right now, doesn't it?
It does. It absolutely does. And again, you're right on this major trend line. Let me show you this, because this is really, I mean, this trend line we hit just maybe 2 weeks ago right here, and you had the big reversal. This was when the invasion first took place. Now you're back into that line again. And you have to say that the more times you hit a level, the more likely you break. And again, I love the analogy of, like, if you're on one side of the door and it's locked, and you need to save someone on the other side, you may run against that door as hard as you can. Probably the first, second time, maybe it doesn't break down. If you keep hitting that door with all your might, eventually it breaks down, right? It's just a matter of how many times. So essentially, this trend line is a door, and you've now hit it very many times, and most recently just about 2 weeks ago. So there is real risk that Apple could now be the next one to see a big decline. And hedge fund managers and institutions are so overexposed to Apple, because it's been a darling for so long, that really that could be a major collapse play where you could see it take down the markets overall, especially with the size of that company.
Yeah, pull up Google real quick, because I think Google's tracking kind of the same thing.
Yeah. And at least Google, I feel like Google, at least from a fundamental point, has a little bit more earnings growth than Apple. I mean, I've always been marveling at Apple, how it kind of is trading at this multiple that doesn't reflect kind of the future growth. I mean, everyone said, oh, the App Store and this and that, but the App Store, I mean, again, comparative to their overall business, it's not that big. They still haven't announced an Apple car, which was thought. I mean, there's so if you just look at what they have, it's definitely not a growth company. Probably should be trading at like 15 PE, and it's definitely in the mid 20s at this point. Here's your chart of Google. And again, Google, same kind of thing. It almost Amazon-ish, right? You kind of have this area right here where it's just been trading sideways inside of this range, and you're definitely hammering on support. It hasn't broken yet, but this is a chart. I mean, this type of chart pattern is a topping chart pattern. I call it kind of like a 3 mountain top, where you have these multiple times where it tries to break out and it keeps failing. And it's kind of like a Bitcoin-ish type thing at 65, 68,000, where, there's a lot of bullishness. Everyone loves the company, but then why wasn't it breaking out? And the answer is, well, there's bigger money selling into it there, right? So this 3,000 even number, there's definitely big money. And if you break this doorway down here, it's got quite a bit of downside potentially, probably again, back to $2,000 or so.
That's interesting. And there's several right there. So Microsoft, I think, looks very similar to that chart. Tesla probably is pretty close. I mean, Tesla, I think, took a little bit bigger of a hit, but a lot of these top stocks, are all very similar in their pattern. Yeah, Tesla took a much bigger hit.
Yep. Yeah, and valuation wise, that makes sense with Tesla, right? I mean, it's still trading at a pretty ridiculous PE ratio. I mean, at least you can kind of say, okay, well, Apple's in that 25 level, but Tesla, I still think, is much, much higher than that. But again, if you look at the chart of Tesla, like this stock has broken down.
Yeah.
Now you're still coaxing in buyers because people are mentally prepared to buy the dip, but you broke this channel that it was in, and it again retraced perfectly to what we would call the scene of the crime right there, and now it's getting pushed back down. And I've said for a long time, and I've been bearish on Tesla based on valuation, that eventually I think it's going to $500, and then 500 will be a big test level here, and then these lows right in this area. So right here is going to be a major test for whether or not this stock can hold up. And again, this stock was trading, over $1,200 not that long ago. So that would be a major haircut.
Yeah. And I think it's a lot of large positions unwinding ahead of, Fed tightening, which I guess they ended their bond purchase program on Friday. So now we've got interest rate policy, look ahead, and then of course offloading the balance sheet. So yeah, there's Microsoft.
And yeah, you can kind of see the same thing on Microsoft that you have on Google and on Amazon, where you have this kind of range that it's been trading in. The kind of the crazy thing here is you could even make out a potential head and shoulders here on this chart right here. And it kind of borderline breaking at this point. But yeah, I mean, these charts, again, if they can hold, then the market gets a reprieve. If not, I mean, that's the scary thing about this, right? Is when you have, it's great in a bull market when the $5 trillion companies are just ripping higher because they take the whole market with it. But the problem is it works the same way on the other side, right? And when it collapses and those stocks are leading the way, then nothing has a chance.
Yeah. And it's that repricing. So, investors are looking at what's a fair price now with future interest rate policy ahead of us. And if you think about, 2% rates and, treasuries trading in the low to mid twos and where inflation is and all those types of things. I mean, where are your ratios at that point? What's a good price at that point?
And what's amazing too is like 2% interest rates aren't ridiculously high, but I argue that you weren't just at zero interest rates or basically close to zero. You were actually kind of negative, because if you factor in not only the interest rates, but then the QE that was being pumped into the system, which is essentially a stimulus like lowering interest rates. And then you go a step further and say, okay, well, the government in 2021 was sending out checks to most Americans. That's even more stimulus. So I mean, you're talking about a much bigger move, taking all the punch away from all those factors.
Yeah, and now you have a triple whammy, so you have rising interest rates, you have inflation all-time highs, which is reducing everybody's disposable income, investable income, spending income, and now you have markets repricing and reflecting those two things. So, I mean, what does the Fed do now? I mean, raising rates, this is where it
gets so crazy, right? Because and I've said this for years that the Fed can't continue to bail things out and leave the punch to the market for this amount of time, because you're always on the verge of another crisis, right? If it's not COVID, then it's a war with Russia invading. If it's not that, maybe it's China invading Taiwan. If it's not that, maybe it's a recession or a financial crisis. You're always a few years away from another crisis. And when you leave the stimulus in the system and you continue to pump it in for way too long, you're going to just end up screwing yourself, because once inflation goes up, I mean, how can the Fed print the same amount? I mean, let's just say we go into a 2008, 2009 recession. What's the Fed going to do with 10% inflation or 8% inflation? I mean, they just can't print crazy amounts of money anymore, because you're talking then 20% inflation. So the bottom line is the Fed is boxed in here. And most likely they're going to have to just at some point let the markets and the economy just flush itself out.
Yeah, and see, that's what I don't think investors believe. I don't think they believe the Fed's going to do that and let markets settle their bets and deleverage like they're supposed to. I think everybody thinks, especially with the war, that the Fed's just going to keep right on going and jump right back in and reverse course. And if they come out aggressive next week, which I feel like they might be a little bit more aggressive than what Powell said a week ago when he testified, the Senate, Finance Committee and things like that. I have a feeling he might go for a 50 basis point rate hike.
Yeah, I mean, he very well could. I'm still in the 25 camp just because, again, the longer this war goes on and the more chance of the U.S. or someone else getting drawn into it, it increases the longer it goes on. I mean, it definitely raises that economic issue where I do think there's going to be a point where everyone's going to applaud the Fed, right? So you're going to have this scenario where at some point Russia and Ukraine, they figured it out. Things maybe get back to a little bit of a normal thing. You have the kind of the supply shock, which is a huge part of the inflation, come off the table. And you'll see inflation going from like 8 or 10% or whatever back to 5%, right? And everyone, you're going to watch this. The media is going to be all over it. Like, oh, Powell knew exactly what he was doing. But the problem is it's not going to go below 5% or so. Yeah. And then again, you get in the same kind of repetitive situation is, okay, well, when we get into a recession, then they print more money, then it goes back to 10%. And then, how again do you handle it on a continual basis when you have elevated inflation? I mean, when it's 2 to 0% inflation, it was easy, but now it's not.
Yeah, very difficult. And given the fact that the economy is so strong, we have more jobs still than people willing to take them.
Yep.
There's just so many things that the Fed is up against in terms of what they can do and how fast they can do it. And, we are definitely really, you got to have demand destruction. You got to put the country in recession. I think we're looking at a global recession now with what's going on. The question is, how deep will that go and how far will that go? Because there's really nothing they can do to stop it. And these things take a couple of years to unwind. Like, this isn't going to reverse course from an inflationary standpoint. A lot of people think Fed could come out, raise rates, stop QE, and we can taper inflation. It's going to take inflation probably 18 months to level off to 2 years, depending on how long this war goes on and how whether or not it escalates into a global conflict.
And I think and this drives me nuts that the media doesn't talk about, but you could directly blame the Fed for creating the wage crisis where these wages have gone up so substantially, because I truly believe that over the last couple of years, as the Fed was just propping the market up and you had the crypto surge, you had stocks just never going down, there were plenty of people that were like, well, why am I working at McDonald's for $10 an hour when I could be a trader and make way more? And, on Robinhood and all these other apps, they're making way more money buying Dogecoin and all these other things. So they didn't want to go back to work. They were making 10 times, 100 times more money doing trading. So the Fed was elevating the markets, making it so they wouldn't come down. It created people not wanting to work, which then caused these businesses like McDonald's to say, okay, well, now we'll pay $15 or $20 an hour. And that's just more inflation to the system. I mean, it's just this merry-go-round of insanity.
Yeah. And, with the hit they're going to be taking, having to shut down, in Russia, other companies as well, that's going to affect corporate earnings, which is going to affect markets and valuations and things like that. And, but from an inflationary front, with energy and things like that, I mean, it's going to be a while before all that unwinds, and, prices aren't going to adjust anytime soon. I think Powell, when he testified, said, I think we're going to level off by the end of the year and we'll see inflation retract. That was before Russia invaded. There's no way he could possibly say that next week. I think he's got to recognize now this is a problem for the long term. We're going to have to be aggressive. We're going to have to reverse course, on policy, and we're just going to have to keep raising rates and until it affects, unless and until it affects, inflation. But I don't even know that interest rate policy at the levels that they're willing to go are going to do the trick, because the markets will collapse before they can make any kind of a real impact.
Absolutely, they will. And I think it's important for people to also understand that when you see inflation come down to 5%, that doesn't mean prices that had been elevated come back down 5% or they cut half of the gains away. It just means you're going up less at a less high speed, right? Or a higher rate. So, I mean, if you're talking gas right now is ridiculous because of the Russia invasion of Ukraine. But, you look at how gas stations behave, and I guarantee it's going to be the same thing where, remember when gas prices go up, they go up immediately when oil goes up. But when oil drops that same amount, it takes like a month or two for them to drop it back down. And you'll see that with prices too. So Americans are going to be paying a lot more for a lot longer. And this is not going to be something that just is gone in a year. Powell's not going to be like, oh, well, prices return to their 2020 levels. No, it's not going to happen that way.
Yeah. And, gas prices, I mean, we were here, 2014, 2015, we had average gas prices over $4. I know they're
Yeah.
in the sevens in some areas. In our area, we just now started crossing the $4 threshold last week, but that's the last time I remember it being over $4. And, that was not anything to do with, anything other than OPEC, cutting production and things like that. So interesting times. Let's take a look at Bitcoin and crypto and take a look at what you're looking at
Yeah,
there.
absolutely. Let's take a look. So let me throw out my chart again here. So yeah, I mean, Bitcoin is behaving kind of just like the chart signals it should. Everyone's always saying, well, what's going on with Russia and Ukraine, that should help it. But the bottom line is the chart is the chart, right? And we know charts have a powerful essence to them. And essentially what you have here on the chart is a lot of choppy action from this bigger move down. So again, this is what we call a megaphone pattern. These two lines are slightly widening. You could also just call it a bear flag, if you will, but you can just see how you're just going up and down like this inside of this range. Now, if you look at 1,000 of these patterns, right, you'll see that a majority, and again, that, 60%, 70, 80%, something in that range of eventually what ends up happening is you'll see, pops and then eventually a breakdown to the downside. So again, as of now, as long as you stay within this pattern, this is a midterm bearish signal. It doesn't mean it's going to break down tomorrow or even next week, but inevitably, if you continue chopping sideways, we refer to it in the technical analysis world as bearish consolidation. So, again, I love it long term, and you can play lots of short-term moves inside of this range. But you should at least for me, I'm expecting it to drop significantly more. I still have a price target sub 20,000 or just sub 20,000.
Yeah. And, what we're seeing a lot of is, long liquidations, short liquidations. It's really interesting because you can watch open interest, you can watch long and short positions, and then you'll see the price react. Just like the other day, it shot straight up and then immediately shot straight back down. And now we're kind of consolidating on the lows of that range. And it's interesting. So if you compare that to last year, June, July, when we were doing the same thing, but more of a falling pattern versus a rising megaphone, and that one broke up. I think a lot of people are looking at that and saying, well, the last time we were in a pattern like this, we broke up. But, this is a very different market, very different price pattern. And we don't have the Fed put anymore. We still had the Fed put back then.
I think that's the biggest thing is, a lot of people are saying, well, basically have this verse 1 versus 2 scenario, right? Where, Bitcoin has never gone and touched a previous pivot high. So the idea that it would get down to 20,000 is kind of crazy to a lot of Bitcoiners because that would be the first time it ever did that. But then you have the other side, which is, well, if you're entering a bear market or a crypto winter, well, then you have 80 to 85% declines historically. And then that puts it way below 20,000. So, one of these scenarios is going to be right. One of them is going to be wrong. I happen to be in your camp. And that was, by the way, a great point. I actually was doing that analysis this weekend, where if you look at this here, you have basically a parallel channel here, right? So pivot point, and then it broke above and retested there. And you have pivot point, pivot point, pivot point. So notice how that channel is downsloping. This channel is kind of upsloping. And you're right. Downsloping channels have a much bigger propensity to break up like this one did, versus slightly upsloping chop is a bigger propensity to break down. So again, they're very minor details here that most investors wouldn't see. But when you really look at these charts closely, there is differences here, and investors need to understand the probabilities that come off of that.
Yeah. And, also on, the supply shock, side of the equation, I mean, the Bitcoin is less liquid now. I think there's less inventory on exchanges than really ever. But of course, that's, whales and large investors moving stuff in and out, which, that can change in an instant with, Bitcoin moving on and off exchanges. But a couple of interesting things coming up next week are, the Terra Luna network is, they're making a $1.5 billion purchase. But, that is going to happen off exchange. So that I don't think will directly impact pricing because that's just not going to happen on exchanges. That's going to be, over the counter deal there. And then, of course, you have the El Salvador Bitcoin bond. I don't know that affects directly because they're raising money to then go buy Bitcoin. But eventually, and he's using the exchanges to buy his Bitcoin. So you have that happening. And then the other interesting rumor that's circulating is that there are some individuals through Switzerland trying to offload, $6 billion to $10 billion worth of crypto. Now, non-specific asset, but obviously the speculation is it's Russian oligarchs trying to, get their money out. but there's rumors out there, and nobody's verified anything, but there are some Swiss banks and Swiss investment managers that are trying to help people unwind some big Bitcoin or crypto positions.
Yeah, and the liquidity issue that you mentioned is important because you could say, okay, well, that means more people are holding their Bitcoin versus having it on exchanges, which is a positive maybe for the longer term. But when something's less liquid, it doesn't take much of a sell to cause a big drop. And then again, that could be what ends up happening, where we just see a 1 week flush down sub 20,000, and then maybe at that point it ends. I don't know, but definitely the chart's signaling that at this point, and it's interesting with the liquidity and how little is on the exchanges.
Yeah. Well, my thesis about prices, all we know is what we have in front of us. And what we have in front of us is March 2020, Bitcoin went down to $4,500 when the world was shutting down economically. So that was a panic sell. We haven't seen that panic capitulation yet on this side of the downtrend. That's the last time we saw one. That is equivalent to the March 2008-9 capitulation we saw in the stock markets. So we know where price can go because it did last time, and that was only a year and a half, 2 years ago. Yeah. And we also know price went to 69,000. So for me, as an investor, I know my downside is 4,500. I know my upside is 69,000. So I make my decisions in that range. But all that being said, I think there is so much more attention on the space now, and a lot more people that would potentially jump in at 30 grand, but to prop the price up at 30,000 and kind of keep it there. But World War III breaks out and, things look just really scary. We see what happens in those environments.
Yeah. And I think one of the big differences that Bitcoin hasn't experienced really is that, since its inception in 2009, this is the first time that we've seen significant inflation where the Fed can't necessarily go right back to printing money, right? Which is, you could argue that was the base case for why Bitcoin was needed. Right now, if you stop that printing press, at least for a short amount of time, it's kind of a new scenario for Bitcoin. And again, to me, that could be a reason also to see further downside, just like in tech stocks.
Yeah. And, from my standpoint and from an investor standpoint, so a lot of people, even me, think there'd be a ton of buyers at 30,000, but if the market's convinced prices are going sub 30,000, they're just going to wait and they're going to let it break right through there. If it looks strong, if there's a lot of momentum into that price level, and then just wait to see where it bottoms out. And then, a lot of these large institutions, I mean, you see people taking, major hits to unwind positions in Russia and things like that. So big companies and big investors, before they'll take a big loss, they'll go ahead and unwind at that $30,000 level and then buy back in later when price settles. So a lot of people don't think that price can go below there because there's too many people that, that's their basis and they're going to support that price, but they just can't. When there's that much momentum, like a March 2020, nobody's going to prop that up. They're just going to let it go and buy back in at the bottom.
And I think one of the big things you brought up, which is something that I watch for, is that psychological indicator, right? So if you go back to like 2018, 2019, I still remember it vividly. And this is where I started to get bullish on Bitcoin back then, when we were in that 5,000-ish range, is when, CNBC had just had the ticker on their lower thing, like constantly 2017, all the way into early 2018. And kind of, I think it was late 2018 or early 2019, it kind of just vanished, right? And they didn't talk about it much at all and almost never came up. And at that point, there was so much bearishness. Will Bitcoin survive and all these things? And then it's like, that is the time to buy. And everyone, I mean, on Twitter, I see it. Everyone's like, oh, if Bitcoin goes to 20,000, I'm going to buy everything. I'll sell a kidney, even someone said, right? And the essence of it is if wherever the bottom is, people, the general nature is to make people so scared that they don't buy it there, right? That's when the bottom is there, right? So lots of little things like this to just pay attention to. And I'm a big fan of looking at markets from a psychological basis. Huge amount of success in picking bottoms and tops that way.
Yeah. So now let's flip the script. So what is it going to take to get Bitcoin back to 69 and up to that $100,000 level? Because I can see $100,000. I don't see beyond that right now because there's just too much risk and too much downside, especially with the, there's no regulation, there's no clarity, there's, and all the things that are going on. But, what will it take to get it back up to that 69 to $100,000 level?
Yeah. So for me, on a technical basis, this orange trend line would be something that if we started trading above here, and I don't just mean piercing, because you could see over here it pierced briefly. You could even argue that it closed one day above and then reversed back down. But if you started really trading above this area, then at least I would say it's going back to this point here around 52,000 or the midpoint of this channel. That would be the beginnings of something that I'd pay attention to. And then obviously, if we start trading up, I think people start jumping back in. There's that momentum trade that would kick back in at a certain price when you start to get closer, and eventually you would get through that. Now, to see that, I mean, I will say this is that, you know, a lot of people have bashed the Biden administration for lots of things related to crypto, but the regulation last week that was brought out is super, super positive. It's not a negative for crypto. And it's that on that track of what I've said for a long time, which is you need regulation in the space to get bigger adoption, meaning that if you want pension funds and you want more institutional money and you want the 80-year-old that has $50 million to actually invest some in crypto, you need to see things that are setting up to make it safer for those investors, right? They're risk adverse people. They have so much money, they don't need to take risk. They want kind of safe trades. And that would be something that I would watch for. So more regulation on the positive side. And I think that the Biden administration really took a nice step this direction last week.
Yeah. You know, several countries are looking at that. And, you know, I keep saying that to people, and I think most people get it, but to me, how is price going to get to 100,000? I think number one is that for investors, like number one, you need regulatory guidance, clarity, you know, things like that for the big institutional capital to enter the space. And there's hundreds of trillions of dollars, you know, or even $100 trillion of investable capital out there tied up with pension funds, insurance funds, sovereign wealth funds, things like that aren't even looking at the space right now, because again, what's their number one thing that they're looking at, right? Preservation of capital. So they have to allocate, but they also have to, hedge that risk, and they have to, do it in a way that they know they're not going to lose their principal. So for me, I think you have to see 30,000 hold up. And then I think you have to see regulation come into the space, because you need right now $1 trillion worth of capital coming into the space to get it back up to 100 grand. I mean, that's just what you need. You're not going to get that at the retail level. That's got to come from the institutional space, and they need certainty, clarity, and they need that risk reward ratio where they know, look, there's a floor here that it's just not going to go below, and they have to be able to defend that, if and when it does reach that level. So to me, that's what I think you need. And if it was purely retail like it's been in the past, we wouldn't be stuck where we're at now, because there's a lot of great fundamentals about the space right now, in terms of use case, adoption, more and more capital coming into the crypto space in general, not just Bitcoin, but other areas of the space. So it's becoming more and more mainstream, but price is not moving. So to me, that says, you need that capital coming into the space, and those are the only way it's going to happen.
Yeah, I agree 100%. And I think it's important, you look at what China has done over the last couple of years, and a lot of people don't remember this, but when they kind of went on the offensive to get rid of Bitcoin and purge it and get it out of the system, to me, that was one of the best things that they could have done for the US in terms of adopting it, because you basically created this new hub of mining taking place in Texas and these other areas in the US, which is now employing a lot of people, and there's a lot of money tied up in it, right? And then we've seen Microsoft go out and buy Activision Blizzard, I think it was, and just this adoption in that way. And that's huge, because it basically will keep the government from cracking down in a bad way on cryptocurrency. So longer term, that's huge. It doesn't necessarily tell you it's going right back to 100,000 or 69,000 at this point, but those type of things have been very positive for US adoption and being okay with it on that regulatory side.
Yeah. Cool. What are you looking at from the altcoin space? You tracking anything specifically over there?
Yeah, a little bit. So, I mean, one of the ones I've been watching, and I've liked the price action on this, is on Polkadot. Polkadot's been holding this key support right here. You got a secondary support line kind of right in this range as well. And what I liked about this is that while a lot of the other alts are kind of just right at their lows, this one's been creeping up the last couple of days and actually outperforming Bitcoin. And again, these are very small candles, so it could change on a dime. But what I like here is, and let me just erase that line, is that I'm watching this trend line right here, and it looks to me like you might be on the verge of just a short-term breakout on Polkadot, right? So you can see, again, just connecting this high to this high, and you've now gotten just above it. So those are little things where where for me, you wouldn't risk a lot, but what I like about it is you can have a very defined stop. And what I mean by that is if basically if price breaks these recent lows, you just stop out, right? So I mean, you're not risking a whole lot, maybe a couple dollars on Polkadot, but if you get a breakout here, I mean, it's possible to at least revisit this area here just under $24, which risk reward does make some sense here. So that's what I'm looking at. There's not a whole lot else. I know a lot of people are looking at Terra Luna. To me, it's hype going into what you were mentioning probably, and that's why you're seeing it. So I'm actually, if it pops north of 110, I would consider shorting it, in fact. And then, yeah, I think that's really about it. Cardano hasn't looked particularly great on the charts. It's kind of just coming off of the lows here. You can see, again, comparing this to Polkadot, right? It's night and day. I mean, this is barely holding on to these little low areas here while you've seen Polkadot start to move up. So I think that's really it. I would say Polkadot, keep it on your radar in terms of alts.
Yeah. And I think, let's take a look at Polkadot again. I think that's down. What is that down from its high so far, percentage wise?
Looks like from about 56 down to the low down here was about 14. Now it's back to 1850 or so. So yeah, I mean, it's a decent haircut, but it's not ridiculous. It's held. You could argue that it's held up a little bit better, maybe.
Yeah. So what is that? 70% plus or minus?
Yeah. Funny to think 70% decline. Oh, but it's holding up better,
The other thing that I'm looking at too, so with altcoins, so typically in the Bitcoin cycle, Bitcoin runs, reaches all-time high, then it pairs off, retraces, altcoins will run right behind it. So usually capital flows from Bitcoin to Ethereum, large cap to small cap. So what I'm looking at is, like coins like Polkadot, they've already, gone on to their 4236 extension from previous cycle highs. To me, they've already retraced. And I think what you're looking at obviously is swing and day trading, but I think it's still unwinding, and you're going to see a lot of these coins get down to 90% losses, yes, potentially another 50% from where they're at now on a lot of them. Because I kind of feel like we've already seen that alt season after the, July, August, September run when all the altcoins ran. When you look at the total altcoin market, and you look at a lot of the coins, they all ran during that time period. So I think, obviously there's going to be some that have strong use cases and things like that might continue on, but the big thing that space is waiting for is Bitcoin to retrace, back up to a, 618 to 702, Fibonacci from where it's at now, which would put it 5560, somewhere in that range, 50, 55, 60. And that behind that, altcoins will run and go on that altcoin season where they all just go parabolic. And I feel like we already saw that, and that we're just going to see some miscellaneous pops here and there, which you're kind of seeing, but I don't know. There's still a hope that there will be a major altcoin season before everything rolls over into a longer, maybe more sustained consolidated bear market if crypto follows what it's done every cycle prior.
Right. And I agree with you in that respect. And I do want to make that clear. And thank you for mentioning that, because I don't want people saying, oh, should buy and hold Polkadot, right? The trades I do are very short term. I'm in from the 16 range on Polkadot already in my service, and we'll probably unload it if it gets to 20 or just above 20 and just say, okay, done. Now we wait. And again, I've said before that I really truly believe that crypto is going to have its .com collapse. And if you look at the .coms, and even the biggest one, Amazon, still dropped $110 to about $6. So if you look at percentages, that's scary even to think about what Bitcoin, but that kind of actually brings up Bitcoin's 4,500 case that you were talking about earlier as well, where that would kind of be your worst case scenario, but that would match Amazon. So if that's the case, then you're seeing Polkadot and these other ones going way, way lower eventually.
Yeah. And that's where they started. I mean, they all started before, that pandemic crash, back in 2020 what was Polkadot, 20 cents? Not even 2 years ago now.
Isn't that crazy? Still, I mean, think about that percentage gain, 20 cents to even $18. It's remarkable.
Yeah. Swing over there and let's see what it looked like right back in that area before the big run.
Yeah, I mean, down here, this is on the chart from Binance. This is as far back as I go, but this was like, $1.50 back here. And I'm sure it was trading before that too.
Yeah. And like Solana, so Solana was sub $1, a year and a half ago, back in 2021, there you go.
Yeah. 13. I mean, like 20, sub dollar.
Yeah. And you can see where it made its first run there in 2021, what is that? October, November, 2021. So you were around $1, then it pops up there and starts going into the $20 range. And then, you see what it's done. So, you have to fully expect something like that. Now there's a lot of, backing in that, in Solana from an institutional standpoint with Sam Bankman-Fried and, other people. but look at where it's headed.
Yeah, amazing. And yeah, I mean, just on a swing trade basis, and this would be purely a swing, but if it gets down to this $60 level on a straight drop, you probably get a decent bounce back, maybe even back to 80 to retest that line. So, I mean, there's little trades that you can do if you're aggressive. But yeah, and I see my computer said, see you later. They just shut off behind me, apparently.
Yeah. Well, that was good timing.
Yeah, there you go.
So, that's the thing you have to watch on these altcoins is that, they'll consolidate for a long time, then they go on these huge runs. And, we had some big, huge runs back in that June, July timeframe. Yeah. So I'm not so sure we're going to see that again in altcoins. I hope we do. I'm waiting for it, but I don't think we've come back down enough and consolidated long enough at these lows for them to go back on another run like that.
I agree with you. I agree. And especially not in a rising rate environment. I think people, a lot of crypto traders, they've never, I mean, this is what's crazy about it. Crypto is such a short period of time. In addition, a lot of these traders are only here, have been here for the last 2 years or 3 years. They've never experienced a tightening phase by the Federal Reserve or even inflation whatsoever, really, aside from the sub 2%. And so this is a whole new ball game. So a lot of people that'll tell you like, oh, it'll never do that because it didn't do this before. I mean, people have to realize you're entering a new phase that crypto has never experienced.
Yeah. And altcoins are different than Bitcoin. So Bitcoin is one thing that's totally different. I'm not talking about Bitcoin when I'm talking about this. I'm talking about altcoins. The other thing is that's competing directly with altcoins, not so much Bitcoin, but mostly altcoins, NFTs, metaverse, all those different things that weren't there 2017, 2018, receiving that capital that would otherwise be trading in altcoins. It's just a very different environment, altogether.
Yeah, it really is. And again, the weird thing about the .com parallel too is, if you looked at all the market caps combined of all the .coms back in 99, 2000, I think it was around 2.9 trillion. And I think the crypto market cap got to about 3.1 trillion, which is so close and just eerie in how that works. And I know we've talked about the chart of Amazon in 2000, how it almost mirrors what Bitcoin looks like right now.
Yeah. And, and that was largely, I think, there was a lot of institutional, capital in that, but a lot of retail. That was a big retail driven event. And I remember that clearly. But, and the other thing, back to what you were talking about, where people, don't seem to think prices can ever, like you hear all the time, Bitcoin will never go below 40, it'll never go below 30.
Yeah.
The thing is that the same people will say it's absolutely going to, 100,000, or that price absolutely Bitcoin only goes one way, which is up over the long term, like, right. Diamond hands, laser eyes, that, it's always going to go up. Well, the thing is, if you believe that and you think that, well, then you have to understand the risk side too. If it can always go up, it can absolutely go back to where it came from. There is no price that it will never go back to again, because it's a risk asset. It just is. And, if you look at risk assets, they've all gone through their cycles and they're going through it right now. And we don't know what levels they can or can't go back to. And you just have to be prepared and have a business plan, investing thesis in place, and your limits, that you're willing to go to if it does go opposite of what you think, up and down, because there's a lot of people that got in, 70% of the people that got into crypto got in the last year at the top. So what do you think is going to happen once we get back there?
Right. Exactly. And again, the market has a way, and this goes for stocks or crypto, of making, a lot of people look the fool. Right. So I look at someone like a Michael Saylor, right. And he's just so hardcore bullish. And the same thing, if you could look at El Salvador and them coming out with this bond, and like the market has a weird way of pushing it to the extreme where they I don't know if, I don't think Michael Saylor would ever lose his job, but, he founded the company, but, where El Salvador, does the president get kind of displaced, does something happen there? And then that's kind of the low pivot, but it's amazing. And I've experienced this firsthand. There's been so many times where I've been so sure on things and then something totally different happens and it makes me look the fool too. And it's just the nature of the market.
It is. And, Michael Saylor is a little different, in terms of what he's doing and what he has to do. Obviously his whole deal is get more people in, because that drives price up and adoption. And he's very good at that. And he articulates Bitcoin well, and he's single-mindedly focused on that. And that's his entire, everything he has, maybe not personally, but from a company standpoint, he's risked the entire company on that bet. And, that bet is only as good as the price of Bitcoin is. And, so far he's doing well with it, but he's close, walking that
Yeah.
line where we don't know what his loans look like. So, he borrowed to
Right.
buy, um, you know, if that price gets below a certain threshold, his loans may get called. He may have to bring more collateral up. We don't know what that looks like. And, until and unless we get there, we won't know what that looks like. He went through the same thing back in, the dot-com bubble. And, he was one of the biggest losers, but he survived, he came back and he made it. But he's taking that same bet again. He's betting the farm on this. And, hey, you got to admire him for getting out there and, holding his guns. And same thing with Kathy Wood. I mean, she's faced a 40-50% drawdown and she's still holding her guns and saying, give it 5 years. It's innovation. It's, so, I mean, that's all you can do. At that point, you have to defend your position, because if you don't, the floor comes out from under you.
Right. And yeah, I mean, for sure, they're looking at a longer term case, but we know that the market and investors oftentimes don't give you that long term view. I mean, just ask hedge fund managers that see with redemptions if they, lose for a year or two straight, even if longer term they make a ton of money. But yeah, it'll be interesting to see how it all plays out.
Yeah. It's, you got to look forward, and, 5 years is a long time. Anything can happen.
It is.
It's hard to have a 5-year outlook on anything. It's just, there's no bets. I mean, look at, somebody can invade, World War III breaks out. You just don't know what's going to happen. And, if that did happen and it was nuclear Armageddon, I mean, none of it matters anyways, right?
None of it matters anyways. Crazy, man.
Then we're trading chickens again and whatever at the end of the day.
That's right. That's why, bringing it full circle back to a little physical gold, not a bad thing to have when you could have World War III and the whole internet's down. And I mean, you pray to God that it doesn't happen. But again, it's one of the reasons why I have a little physical metal as owning it, just because you just don't know.
Real estate. Everybody needs a roof over their head.
That's right.
Awesome. Well, Gareth, I appreciate you taking some time out today. And I look forward to chatting with you again soon.
Yeah, thank you so much. Great conversation, and I look forward to our next time.